Welcome to the Daily Business and Finance Show. In today's episode, we delve into the world of stocks and investments as Josh Brown trims Nvidia by 20% and Warren Buffett's Berkshire Hathaway increases its stake in Occidental Petroleum. We'll also discuss Snap's 30% slide despite user growth and profits, alongside Palantir's off-the-charts success signaling the arrival of the AI revolution. In energy news, Enphase Energy misses EPS estimates while Ford Motors surpasses expectations. We'll explore Disney, Warner Brothers, Discovery, and Fox's joint venture into sports streaming. Plus, we've got insights on top-rated dividend aristocrat stocks for 2024 by CFRA and a look at cannabis stocks rebounding amid DEA rescheduling review. Stay tuned after this short ad break to learn more about these exciting developments. Josh Brown, who is the chief executive officer at Ritholtz Wealth Management, has decided to decrease his investment in Nvidia by a fifth. This decision comes as a result of what he perceives as too much enthusiasm in the market. Even though Goldman Sachs has increased its price target for Nvidia from $625 to $800, and despite the stock's increase of 35.13% since the start of this year, Brown thinks that this level of excitement is overblown and not grounded on any fresh developments. While he continues to hold an investment in Nvidia, he does so with caution.
Berkshire Hathaway, owned by Warren Buffett, has acquired an extra 4.3 million shares in Occidental Petroleum at a cost of roughly $245.9 million. Even though Occidental's shares have seen a decrease of 1.2% this year, Berkshire views this as an opportunity to buy more. Currently, they hold around $14 billion worth of the oil producer's common shares.
Snap Incorporated, the parent company of Snapchat, experienced a 30% decrease in after-hours trading due to its revenue growth in the fourth quarter falling below expectations. Even though it surpassed predictions on user growth, cash flow, and earnings per share, its revenues only saw a 5% increase to reach $1.36 billion. This was less than the anticipated 6.3%. On a positive note, there was a rise of 10% in daily active users, which brought the total to 414 million. The firm also managed to cut down its net loss from $288 million to $248 million compared to last year and is projecting that it will reach 420 million daily active users during the first quarter.
Palantir Technologies has recently reported robust Q4 results and guidance, sparking a wave of optimism regarding the profitability of artificial intelligence. The firm's U.S. commercial business witnessed a growth of 70% in Q4, accompanied by a 44% surge in commercial customer count. Even though the guidance for future quarters is mixed, analysts are confident that Palantir is reaching a turning point, particularly in its commercial business sector. This positive news led to shares rising by 24%, which signifies an impressive gain of 150% over the previous year.
Enphase Energy reported its fourth quarter earnings per share at 54 cents, missing the expected amount by 1 cent. The company's revenue also saw a decrease of 58.2% compared to the previous year, totaling $302.57 million. This was a shortfall of $25.44 million from the projected revenue, attributed to decreased shipments and a drop in demand. Looking ahead to the first quarter of 2024, Enphase is forecasting revenues in the range of $260 to $300 million and gross margins between 42 and 45%.
Walt Disney, Fox, and Warner Brothers Discovery are collaborating to establish a sports streaming platform. The ownership of the platform will be equally divided among the three companies. This joint venture aims to consolidate their resources and enhance bargaining power in light of escalating sports rights costs. The platform can be accessed via a dedicated app and may potentially be packaged with Hulu, ESPN+, and Max subscriptions. Its launch is scheduled for the fall season, featuring content from prominent sports networks like ESPN, ABC, Fox, TNT, among others.
Ford Motors' fourth quarter earnings per share surpassed expectations, coming in at 29 cents. The company also reported a revenue increase of 4%, amounting to $46 billion. For the upcoming full year, Ford is forecasting an adjusted EBIT ranging from $10 to $12 billion and anticipates generating free cash flow between $6 and $7 billion. Despite expecting a stagnant U.S. industry volume and decreased vehicle pricing, the company sees potential growth opportunities from new Super Duty sales as well as cost improvements.
The Dividend Aristocrats, compiled by the CFRA, is a list of S&P 500 stocks that have consistently increased their dividends for over 25 years. This list includes highly rated companies such as Abbott Laboratories and Coca-Cola. In 2023, there was a decrease of 21.1% in U.S. common dividend increases. However, the outlook for 2024 remains cautiously optimistic despite economic uncertainties and evolving dividend patterns.
Cannabis stocks are experiencing a surge as the Drug Enforcement Administration, or DEA, considers downgrading marijuana from high to low risk. The advisor shares Pure U.S. Cannabis ETF, which represents multi-state operators in the United States, has reported a 49% return this year. Other cannabis ETFs have also seen an increase in value. This upward trend started in August when the Department of Health and Human Services suggested that the DEA should reschedule marijuana under the Controlled Substances Act. Experts are predicting a favorable outcome with a significant policy decision anticipated from the Biden administration this week. That's it for today on the Daily Business and Finance Show. Remember, the market waits for no one, so stay informed and keep investing wisely. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.